Now on BBC News, the latest from New York and around the world. Business Today.
This is Business Today, live from New York at the opening bell, where there's been a muted start on Wall Street as investors react to the official end of the government shutdown. Stats on standby. Investors keep a close eye on delayed economic data for the shutdown's effect on the US economy. Plus, hitting the brakes, UK growth stalls in the 3 months to September as the JLR cyber attack jolts manufacturing and puts pressure on the Chancellor. And a showdown brewing. Starbucks baristas prepare to go on strike on one of the coffee giant's biggest sales days, complicating the company's turnaround plans. Welcome to Business Today, live from New York. I'm Michelle Fleury, and we start here in the United States, where the financial markets are reacting to President Trump signing into law a bill ending the longest government shutdown in the country's history. It comes after the House of Representatives passed the bill, already passed by the Senate, which will now keep the federal government funded until the end of January. Investors are also waiting to see if last month's economic data, delayed by the shutdown, will be released anytime soon. Elsewhere, Disney disappointed investors with its shares down 3% due to a continued slide in its cable TV business. Well, to pass through all of this, I'm joined now by Glenn Smith, Chief Investment Officer at GDS Wealth Management. Glenn, good to see you. Look, let's start with the shutdown over. How soon might we see a resumption in economic data that I know certainly people in your shoes in the economic world have been waiting for?
The reality is the economic data in terms of October may never be released. We think it could start picking up as of November. Fortunately, we have a lot of private data out there, and you can see that the market is softening a bit in terms of labor market in sectors such as manufacturing, but you have other sectors such as service sector that's growing. So some of this data may not be there, and investors are going to digest whatever is available out there when it comes.
I mean, where does that leave the Federal Reserve? Obviously, December, people are talking about maybe a 0.25 percentage point rate cut. Do you think that is still on track, or will they sort of wait and see?
We do. We think the market is cooling, the economy, not cracking, but definitely cooling. So there's enough data out there to warrant for the Fed to, again, cut rates just like they did in October. We think they're going to cut rates in December. And going into 2026, if inflation stays and hovers right around 3%, if unemployment numbers hovers a hair over 4%, it's a weak enough market to warrant lower interest rates, but not weak enough to suggest we have an imminent recession anytime soon.
I mean, Disney reports earnings. Obviously, the share price currently down around 7%. I was just checking. You know, how much of a bellwether is that for the health of the U.S. consumer right now?
We think it's a bit. The economy is in so much different parts right now. You have the tech, which has even within tech, you have sectors that are extremely expensive. You have others that are a little bit cheaper. So I think as an investor, what you want to do is not dissect the S&P in general, right? You have 6-7 stocks of the U.S. S&P 500 that represent the third of the market. So you want to be very selective. I don't think ESPN, which obviously is part of Disney, they're going to be a major impact of what people are looking going forward in terms of being a bellwether. But I think what you want to do is you want to look at the broader economy in general, not any one sector or stock at this point.
And when you talk about sort of cracks beginning to appear and weakness, what do you then make of the Dow? Obviously, it's down this morning, but I mean, it is coming off record highs.
We think we're going to have a little bit of a Santa Claus rally coming into 2025. This could be the first time since the 90s where we've had 3 years in a row with the market up over 20%. And it's kind of a tale of two stories, if you will. You have in general, the market's doing very well, but you have pockets of the market that you have stocks that are not performing well, that I think you're going to continue to see sectors rotating into those stocks that are underperforming. So we think that the market's going to finish strong, especially if we get a rate cut in December. And if you look at maybe the mid-cap stocks, historically, the market in general loves lower rates, but there's certain pockets of it that do extremely well when rates are lowered because they're so dependent upon borrowing money to keep the growth momentum that they have.
I like that, an early Santa Claus rally. Glenn Smith, great to see you. Thanks for joining us.
My pleasure.
Well, we cross the pond now and focus on the UK, where official figures confirm the economy has slowed to a near standstill. The GDP figures, which came in worse than expected, will pile yet more pressure on Chancellor Rachel Reeves as she prepares to announce her budget in 2 weeks' time. Figures released show growth between July and September was just 0.1%. The Bank of England had forecast a slightly higher 0.2%. The figures also show the economy actually shrank in September by 0.1%. Now, that's reflected in part by a production shutdown at Jaguar Land Rover, which was triggered by a cyber attack. Chancellor Rachel Reeves is determined to turn things around.
The numbers for this quarter clearly reflect what happened at Jaguar Land Rover, a massive cyber attack, the biggest cyber attack that this country has ever experienced. And as a result, car manufacturing fell almost 30% in September. Jaguar Land Rover is now back and up and running, in part because of the support that this government put in, both to help with the cyber attack itself and also to support the supply chain so that that business has now begun car production again. Overall, this year to date, we have been the fastest growing economy in the G7, still awaiting US numbers. But of course, in the first half of this year, we were the fastest growing economy in the G7. Is there more to do? Absolutely. To grow our economy, to ensure there are good jobs, paying decent wages in all parts of the UK.
The British Chancellor speaking to us 2 weeks before the UK budget. Well, back to the US, and a showdown is brewing between Starbucks and thousands of baristas. Members of Starbucks Workers United say they will go on strike on one of the coffee giant's biggest sales days, unless a labour deal is reached. Now, that deadline was today. It will be the third major walkout since the union launched 4 years ago on Red Cup Day, and it comes as the coffee giant faces slowing sales and a major business shake-up. I find out why Red Cup Day may not be the best of days for customers. This Thursday, instead of long queues for coffee, some stores could see picket lines. Unionised baristas in 25 cities plan to strike, pressing for their first labour contract with higher pay and more flexible schedules.
Baristas are tired, they're fed up, and they want a fair contract. They want the fair contract that they've earned, and they want the company that they work for to do the right thing and stop union busting.
The action comes as the coffee chain struggles to revive growth. Global sales rose just 1%, while US sales were flat. In a statement to BBC News, Starbucks said it was disappointed the union chose to strike rather than return to the bargaining table, adding, "When they're ready to come back, we're ready to talk." CEO Brian Niccol recently told our US partner CBS News that the company already offers some of the best jobs in retail.
We have the lowest turnover in the industry. It's below 50%. We also have the best benefits in the industry, and we actually have the best wages in the industry.
Starbucks has been cutting costs, closing stores, reducing staff and selling off much of its China business to boost profits. Ahead of the walkout, more than 100 US lawmakers, including Senator Bernie Sanders, urged the company to end what they called union-busting tactics and to resume talks. The two sides aren't currently in active negotiations after discussions broke down late last year. While the union represents only about 4% of the workforce, the strike could still disrupt operations and complicate the coffee chain's turnaround efforts. Now, in other news, Argentina received around $900 million in support from the International Monetary Fund, with help from the United States. The US tapped its special reserve funds, boosting Argentina's account and giving it enough cash to strengthen reserves before a major debt payment this month. Plus, Apple has faced a wave of online mockery following the release of its new carrying case for the iPhone. The US tech giant was ridiculed after it revealed the iPhone Pocket earlier this week, which retails for $230. The accessory is part of a limited edition range in collaboration with the Japanese fashion label Issey Miyake. But many took aim at the high price online, while others made fun of its striking likeness to a sock. Staying with fashion, Skims, Kim Kardashian's shapewear brand, is now valued at $5 billion after raising $225 million from investors, including Goldman Sachs. The company, which already runs 18 US stores and sells globally, plans to expand its physical retail presence worldwide. Now, the funding round is one of the biggest this year for a US consumer brand as Skims battles rivals like Lululemon. We're joined by Jacinta Fall, who is the CEO of Social Chain, a leading social media and influencer marketing agency working with major brands such as Unilever and TikTok. Great to have you on the programme, Jacinta. I mean, explain to me for a second, Kim Kardashian has had many businesses. Why do you think Skims has been so successful? What's the secret sauce?
Well, we've seen for a while now this trend of businesses and culture coming together to drive revenue. The markets are recognising this change and shift over the last 18 months. We've seen it for a while in our industry of digital and social. The consumer confidence in influencer marketing means that there's guaranteed growth and media potential when you invest in businesses like Skim.
So does that mean that you basically redirect marketing spend away from traditional channels and put it all in the sort of influencer bucket, or is it kind of distributed kind of many buckets?
It's distributed across a number of channels, but you'll see that the shift is now far more in favour of digital and social. In the early quarters of this year, we saw Unilever and Fernandez saying he's going to take his social spend up to 50% of total channel spend, and they were going to work with 20 times more influencers. So even traditional brands are doing this global shift. That kind of speaks to the performance value for markets in spending in our channels.
When you're talking to clients, I mean, are you recommending celebrities or influencers?
It's a combination, and it depends on the client and the profile. What you have to understand is that most people are doing the utmost to protect their audiences, their authenticity, and also their potential for earnings. So there's a huge amount of protection for brands, and everyone wants there to be a good fit. We're there to make sure that it's right, it's going to drive business KPIs, and also to make sure it's a true representation of brand ambitions.
Jacinta, we are out of time. I wanted to ask you who your favourite celebrity would be to see on Skims, but unfortunately, that's it from us, so we're going to have to leave it there. Jacinta Fall, thank you.
Michelle.
And that's all from Business Today. Thanks for watching. Do stay with us here on BBC News.